Hey everyone, welcome in to another daily editorial here on the KE Report, chatting with Dave Erfle. We're going to be looking at some of the more technical levels for precious metals, maybe get a couple comments on the stocks, which I know, yes, they are still broadly lagging these better metals prices, and then look ahead to the end of the quarter, which is, well, not that far away right now. Dave is the founder and editor of the Junior Miner Junky. Dave, let's start with gold. I feel like we've been saying this for the last few months, but gold holding up relatively well. Yeah, it's a little bit off of some of the recent highs that were made in the last couple months, but quite frankly, it's still holding above that $2,300 level. Historically, still a strong price for gold. However, it has lost some of that momentum that really started beginning of March when it started running higher, broke through 2,100, reached the whole way up to almost 2,500. Now, again, back at 2,300, more or less sideways for the last month or two. Dave, what are you looking at in terms of technical levels? Most importantly, on the downside, to confirm the bullish bias that this is not part of a correction or the end of the bull market run for gold.
Yeah, Corey. I mean, after we had yet another volatile Fed week last week in the precious metals complex, gold futures, they basically remain stuck in a broad range between 2,300 on the bottom and 2,450 on the top. So thus far, we've had, after a 9-week $450 move from the 2000 level, we had that breakout, that 13-year breakout, finally on a monthly closing basis above 2000. That got a lot of interest and a lot of attention into the sector. And we had that $450 move, took 9 weeks. And now we've had a 9-week consolidation of that move that's corrected $150 down to 2,300. That is normal, healthy action. So everything in the gold price looks very normal and very healthy. And it's also happening on lower volume. It's consolidating that move. It needs to consolidate those huge gains.
Well, Dave, let's also take a look at silver, gold's scrappy little brother. It had a pretty epic move as well. And really, on a percentage basis, it outperformed gold on the way up, but it's also rolled over a lot harder, kind of in sympathy with copper and a lot of the other industrial metals. There's that hybrid nature to silver, but it's kind of hovering around the 50-day moving average, and it's consolidating here. Should people be concerned that the move in silver is over? Because it's a little different chart than gold.
Yeah, I mean, that looks like healthy action too. I mean, you've had higher highs and higher lows. Silver moves up to a level, gets overbought, it starts consolidating the gains, moves up again, start to get overbought, starts consolidating those gains and moves back down to test the previous high. And it's done that 3 times now since it started to break out in March with the gold price. So, I mean, everything looks healthy and normal as far as bull market action in the silver price as well. I mean, that 30 level, it did lose that 30 level recently, but like you said, that 200-day moving average has been acting as support. And if you take a look at the weekly, it's the 18-week moving average, which has been support also, and that's rising at around 2750 now. So, I mean, we could see silver go a little farther down here, and also the gold price, also that 18-week moving average has been good support for the past year or so. And that is around 2290, 2280, 85 right now. So 2,300 is the level to watch on the gold price. And I think 2750, 28 is the level to watch on the silver price. And also, if we flip over to the gold silver ratio, that 80 level has been a key level for so long. We started to move below it, and that's when the silver price and the miners started to show relative strength against gold once that gold silver ratio started trending below 80. Well, it's moved back up now to back test that 80 level. And at the same time, we've seen the miners in silver start to show a little relative weakness. So once we see silver and the mining stocks start to show relative strength again, and that gold silver ratio start trending below 80 again, that'll give us a hint that this consolidation and correction is over in the gold complex.
Let's take a quick look at the GDX chart as well, because look, it does feel like, and it's true, that the stocks have lost a lot of their momentum that they really picked up at the beginning of March. But you look at GDX from March 1st, when the market turned for the stocks, GDX to its peak in mid-May was up a little over 40%. In this last month, it's down about 10%. So really, number-wise, that doesn't seem that bad at all. However, some of the momentum has been lost. But Dave, why does it feel so much worse than when you actually just look at the numbers?
Well, because we haven't really gotten that 2-3 times leverage to the gold price, especially when you had a major breakout in gold. Investors were expecting more leverage, understandably so, because the gold stocks are still so relatively cheap in relation to the price of gold. But like you said, I mean, it all looks healthy. We've had 10% corrections ever since the gold price broke out in late March and took the stocks with it. So if you take a look at the 32 level, that's really strong support on GDX. And it's also lining up with its 18-week moving average around 30, which is around 32.55 right now. And that's what's holding. It's trying to bounce from there right now. So, and that number in the GDXJ is around 40. So unless the gold price loses 2,300, I think those support levels hold and we start to go higher again. And the number to look at in the gold price at post Fed speak, it got up to around 23.58. I think if you get a move above there, I think that would be a hint that this correction would be over. If you start to see the silver price and the miners leading the gold price again with it.
Well, Dave, when you think about the stocks that are actually in the GDX, they're mostly the royalty companies, the larger cap senior miners, and some of the mid-tier miners for the gold, and maybe even a few silver gold ones in there. And when you think about the first quarter, we were talking about this off mic, the metal prices were nowhere close to where they were in the second quarter. And so while this may be a little tired and trite, we can still look at the second quarter as possibly outperforming investors' expectations and maybe some analysts' expectations. Same thing with silver. The first quarter, silver was in 22 to 25 range most of the quarter. Now it's been up in the high 20s and even low 30s for a while. Do you think when the producers that are in something like GDX or maybe an SIL for the silver, when they finally report second quarter, just maybe in a month or two, could that be a catalyst that people aren't looking at right now?
Yeah, absolutely. I know there's some analysts now putting a buy rating out on Newmont, expecting that because look, back in Q1, the gold price averaged around 2070, 2080. The oil price is about where it is right now. All-in sustaining costs were around 1475. And now you've got Q2, the end of Q2 coming up here in a couple of weeks. And it looks to me like the gold price is going to average above 2,300. So that is a huge difference. And these profit margins are going to be a lot bigger in Q2 for some of these companies. We had Newmont had a blowout quarter and the stock went up 12% the day that it announced their blowout quarter. And I would expect their quarter Q2 to be even better because the gold price is so much higher and inflation, although it's remained sticky, it really hasn't gone up that much. But the gold price has, and the oil price has pretty much remained the same. The oil price is about 50-60% of cost, especially in a company like Newmont. It's got these big, huge open pit projects. So I would expect Newmont's Q2 to be blowout. And I know a lot of these analysts are expecting it too.
Are you looking at the majors broadly in terms of their performance, or is it still just kind of this selective market where a handful of stocks are running, so you need to be in those stocks to carry that momentum through? How do you view it? How do you think other people, other investors would view it?
Well, we really need to see the miners start to outperform more, especially Newmont. Newmont needs to get over $45, $46 to start moving strongly to the upside with volume, because that shows you that there's finally some general interest in this sector. And Newmont is the general, right? They're the largest gold stock. They're twice as big as the number 2 gold miner, which is now Agnico. And I really don't think the rest of the sector will start to take off until these leaders do, because that's what gets the attention of generalist investor.
Well, Dave, maybe just throwing a different angle at this. I know that we're mostly just trading amongst ourselves as resource investors currently, but when you think about some of the worst companies that are producers, some of the best of the worst, as we call them, their margins are higher. They generally struggle at lower prices. But again, when you think about some of the scrappier silver producers that are small, or some of the smaller gold producers, they're going to put in a second quarter that should give them a lot bigger margin percentage increase. And so sometimes we'll see some of the small and mid-cap companies just blow away companies like Newmont to the upside. Could that bring some excitement in the sector when the lesser companies actually perform better because their margins increase so much?
Yes, it'll bring some excitement down to the totem pole into the investors that are resource investors. Absolutely. But the generalists that don't really follow juniors or mid tiers, they're basically looking at the biggest, most liquid gold stocks and the royalty streaming companies. Those stocks need to start outperforming better to get generalist interest. But you're absolutely right. We see mid tiers and the smaller and smaller growth oriented producers have blowout quarters. That'll get a lot of interest coming in from the resource speculators.
Yeah, that's what we need. More speculators coming in, because these moves in the stock still have been relatively muted, I guess, and they just haven't been rising tide lifting everybody. It started to happen in March and April, but that seemed to have petered out. So I know a lot of people still sitting on these positions saying, come on, gold's doing its job, silver's doing its job for the most part, but the stocks aren't picking up the pace. Maybe this is still just one of those long-term great opportunities for investors. I know we're all sitting in some stocks wondering, man, why isn't this one moving higher? But that's also just the market, something that we're talking a lot about off mic, Dave, and maybe the turn of this quarter, maybe the earnings when they come out could drive some more money in. At least it is still an uptrend that started in March. Just some of the momentum has been lost over that last month. Dave, as always, thanks for your time. We'll chat next week. I hope you have a great rest of your week.
Thanks, guys. You too. Look forward to it.